The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. I'm Nadiah Koh. The world of high net worth investing is navigating a period of significant uncertainty and opportunity, shaped by technological advancements, geopolitical developments, and evolving market dynamics. Recent findings from HSBC's Private Wealth Market Pulse survey reveals key trends among investors in Hong Kong and Singapore, highlighting a cautiously optimistic outlook for equity markets like the S&P 500 and key Asian indices, alongside a heightened focus on the dual nature of technology, both as a risk and major investment opportunity. With many high net worth individuals adopting diversified, multi-asset strategies and a keen eye on long-term income stability, what can we learn from their investment strategies? To find out more, joining me today is James Cheo, Chief Investment Officer, Southeast Asia and India at HSBC Global Private Banking and Wealth. James, welcome to the show.
Well, happy to be here.
All right, James. According to the latest HSBC Private Wealth Market Pulse survey, over half of high net worth individuals surveyed are optimistic about the S&P 500, Hang Seng Index, and Straits Times Index. What specific factors are driving this bullish outlook, and do you see any potential challenges in maintaining this positive view?
Yeah, well, you have to take into context that this survey was done before the April volatility that we saw in markets, but it does reveal some underlying trends in which where high net worth individuals are looking out for in terms of their investments. US market continues to be a very important part in terms of an allocation for equities. Really, because if you look at the last couple of decades, US equities have always been the strong outperformer. Over even the last 2 years, US market have had 2 bull runs consecutively. It's only this year where we saw US markets pulling back somewhat, albeit, of course, because of valuations are fairly stretched. So I think high net worth individuals continue to, like US markets, but also I think increasingly this year, there are other markets that they think that they can diversify into. Hong Kong, China is another one, given valuations are comparatively lower. And also I think there are many innovations that's coming out from China, whether it's along the lines of AI or even electric vehicles. So that's something very interesting. And of course, Singapore will be always a perennial favorite because of the dividend yield, the stability, and also the last year we've seen a very strong outperformance in Singapore stocks. So I would say that despite all these near-term uncertainties and market volatility, these markets will continue to be part of high net worth individuals' strategic core holdings.
Okay. The HSBC survey also reveals that 92% of respondents of high net worth individuals maintain a neutral to positive outlook for Asia's economic prospects in 2025. What aspects of Asia's economic landscape do you think are most influencing this sentiment, and how do you see this playing out over the next 12 months?
Yeah, well, I think Asia will continue to be a very important contributor to global growth. Yes, China's growth is slowing down, but it's still the second largest economy. So in terms of the increase, even if it grows at 4 to 5%, that growth is going to be very significant. But what's also interesting in Asia is that we are witnessing the rise of ASEAN and India, which is, I would coin it as the new AI. So it's going to grow for ASEAN easily 5%, and also for India 6 to 7% over the next 5 years. Yes, there's going to be near-term challenges, but the structural story for Asia continues to be very strong. So I would say that looking ahead in the next 5 years, investors are looking at how they could capitalize on this strong trend of Asia, in which you're going to see a rise of a new middle class, especially from ASEAN and India, and also how technology is starting to improve and upgrade in many parts of Asia, especially in North Asia. So yeah, I think the prospect for Asia continues to be robust, looking further out ahead.
Speaking of AI, there are 44% of respondents expecting that artificial intelligence and technological advances to create significant investment opportunities. while 47% view them as risk. With such a diverging perspective on AI and tech among high net worth individuals, what does this signal about these individuals' view on these opportunities? Is the AI hype among them over?
Yeah, well, AI, if you think about it, the risk and opportunities are two sides of the same coin. In terms of opportunities, it's huge. It could transform the way we work, enable many, many other technologies. And also, I think it gives a new understanding and perspective in many other fields, whether it's to do with healthcare, looking out for new cures, or even how does AI even make our daily lives even much more efficient and to even help us make decisions faster and better. So the opportunities are huge, but on the other hand, AI could also be used for malicious means in the wrong hands. So there is a risk too, and also there is also a risk of displacement of jobs. So society as a whole has to determine the guardrails to protect people in this. As with this new technology that's moving extremely fast. Just like, in all big technological innovations, whether you look at it over the last century with the rise of internet or even the rise of even further back electricity, steam engine, all these big changes ushered in a new age. But alongside, there are many changes. So I would say it's both opportunity and risk, two sides of the same coin. And I think that's why the survey results show, one group seeing it as opportunity and the other group seeing it as risk.
So you've mentioned that AI is a huge opportunity in terms of understanding in healthcare or even AI in daily life, but there's also risk. So at this point of time, do you see AI as a bubble, or do you believe that it will have tangible long-term effects on corporate profitability?
Yeah, as with all new trends, there might be short-term exuberance, and that usually leads to over-investments in certain segments. But ultimately, I think the efficiency gains, the use cases of AI, I think would slowly pan out. So I think it's an enduring trend. It's not a trend that would just move on a straight line. There will be gyrations, but ultimately the trend is. So yeah, I think this is something that many people are looking out for because of the transformative effects of what AI can do and be applied in many sectors and many areas of our lives.
According to the report as well, close to half of respondents, or 46%, are employing diversification and active investment strategies to manage volatility. What specific approaches are high net worth investors looking towards to reduce risk while maximizing returns in the face of market unpredictability?
I think the first line of defense is always to have a globally diversified portfolio. So for anyone with a portfolio that's globally diversified, it would be actually much more resilient, especially amidst this current heightened market volatility. But also, I think increasingly, it's not just having a static allocation to a diversified portfolio. There must be active management to adjust tactical tilts because the situation is so fluid. So I think active management, for once, I think it's going to be much, much more important compared to, let's say, over the last 2 or 3 years in which we had a rising tide. And that rising tide essentially lifted all boats. So if one would to be just invested in an ETF, for example, last 2 years, it would benefited a lot. But this year, as how it unfolds, I think just being in a passive strategy on its own, it's not enough. There is a need to be actively manage security or stock selection, bond selection is going to be crucial. Sector tilts are going to be very important. And so I think because we are in a very, very uncertain time. So I think that's why global diversification and active management are key strategies in 2025.
I see. So speaking of a diversified portfolio, 15% of high net worth investors believe that putting some of their eggs in alternative investment offers the best long-term opportunities. So what kind of alternative assets are they looking towards as part of their strategy, and what are some advantages and risks you associate with these assets?
Yeah, well, I think alternative markets provide a sort of a diversification, and it's a way in which investors could actually get exposure to global opportunities, but also to help them mitigate risk. And it should be viewed in the context of public markets as well. So instead of just having pure allocation to public markets, which actually can be quite volatile. Investors are viewing private equity as a kind of a way to complement their existing public equities, because the opportunity sets in private markets are actually much larger compared to public equities. And also the risk reward, especially if one has a longer term perspective. Private markets, especially private equity, does offer higher returns because of the illiquidity premium that investors have to give up. And also similarly, if you look at in the bond space, public bonds, fixed income, it's been a kind of a staple for most investors. But increasingly, investors are also looking at private credit as a way to kind of augment and supplement the income that they can get from traditional fixed income instruments. So I think that's how investors are broadening out their exposure beyond public markets and going into private markets to kind of capture additional what we call alpha in this fairly uncertain world.
Let's go back to that fixed income. It's emerging as a top long-term asset class as a significant portion of investors are looking for more stable income streams. So given the findings of the survey, do you think that the shift towards stable investments like fixed incomes and commodities is indicative of a broader trend among high net worth individuals, or is this specific to current market conditions?
I think income has always been a staple for high net worth individuals because they've built their wealth through their businesses, and they usually, when they start investing into more liquid instruments, they want to get an income from that entire so-called wealth that they have accumulated. And traditionally, fixed income securities was the way for them to get income. But remember, over the last decade or so, fixed income securities are yielding 0 to 1 or very, very low interest, really because we are at a kind of a zero interest rate world. But now, interest rates are hovering anywhere between 4 to 5%, and that risk-free rate is now no longer at zero. So it does give investors a way to get quite a stable and safe income, and using that as a starting block to pile on and increase their risk taking when it comes to income portfolios. So I would say that income is very important, and the good news is that it's no longer at zero. You don't need to take excessive risk. Risk-free rate can be anywhere between 4.5% to perhaps even 5% if one looks at adding some investment grade risk into it. So I would say the building blocks for fixed income is looking quite interesting for high net worth investors in this year and in the years ahead.
Okay. I want to take a quick look at another finding from your survey. Nearly half of respondents are employing active investment switching strategies. How frequently do these individuals re-evaluate and adjust their portfolios? And what criteria do they use when deciding whether to adjust their positions?
Yeah, well, I think it's always good to have a principle of rebalancing your portfolio on a regular basis. You don't need to do it on a daily basis, nor do you need to do it on a weekly basis. It depends on the individual. Some do it on a quarterly basis where they meet with their advisors, or some do it on a half-yearly basis. But the principle essentially is that they want to maintain a certain proportion between equities, bonds, and private assets in their portfolios, and a certain allocation to a country. But as you know, the allocation will move because asset prices move as time progresses. So the idea is that you sell out sectors that have done well or moved up a lot more, and you rebalance back into sectors that are undervalued. So this principle allows you to kind of buy low and sell high and adjust it from time to time. So this is something that we do it very regularly, and I think it's something that helps investors achieve their goals, because if you don't do that rebalancing from time to time, you end up having a portfolio that is too skewed towards one particular asset, and at the end of the day, it might not meet the objectives of investors because of that lack of rebalancing that wasn't done in the right way.
Right. So, James, with all the uncertainty around technological disruptions, geopolitical tensions, we've seen Trump's tariff swinging markets. What is your overall outlook for 2025 in terms of investment opportunities and risk?
I think it's going to be, at least in the near term, fairly uncertain because of all these policy uncertainty, until we see a sort of a landing ground of where all this policy will end, will there be more stability and where markets will know how to price risk assets in a right way. So meanwhile, it's going to be volatile, but that's short-term view. But if you look further out ahead, longer term, there are many companies with strong fundamentals still. We talk about the positives or the structural trends of technology, of AI, of energy transition, of the rise of middle class. I think all these things would still be there regardless of the short-term policy uncertainty. And I think that's perhaps these are places where investors can build their portfolios along, these lines of structural growth that could, help them kind of gain and make their portfolios more resilient over the long haul. But yeah, near term, it's going to be uncertain. But long term wise, the fundamentals of companies that are geared towards these structural trends still look quite promising.
I see. So James, before we let you go, are there any key findings from your report that you'd like to highlight?
I think what's important for investors, again, is that you want to have a diversified portfolio in this very uncertain time. And I think that's what many high net worth individuals have embarked on. And also active management is going to be very important for 2025. So, and of course, these are the key principles that one should have. And the third thing I would add is also that it's also important to reevaluate your portfolios from time to time, make that adjustment, that rebalancing. If your portfolio has too much risk, you might want to scale it down a little bit. But also, if your portfolio has too much cash or too little risk, maybe now could be a good time, to be greedy when everyone is fearful.
All right. Thank you, James, for your wonderful insights today.
All right. Thank you very much. Glad to be in this conversation.
Thank you. That was James Cheo, Chief Investment Officer, Southeast Asia and India at HSBC Global Private Banking and Wealth. This has been the Wealth Tracker with me, Nadiah Koh.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.